Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
I'm not sure if I can take one more poll, if it's going to really skew up our chat box here, but how many people are trading with Thinkorswim, by the way? How many monkeys do we got in the room here today with us? Monkeys is a good term. It's a Thinkorswim term. I know that our host at ISE probably cringed, but we do have a few Thinkorswimmers in the audience. Okay, great. So
that's
many
okay.
of you probably...
That's good, John. That's good, John. That's good.
Well, when you open an account with Thinkorswim, you get a stuffed toy monkey, so we call them monkeys.
Perfect.
So they know what I'm talking about, and it's in a good way. So in any event, many of you are probably, if you've got an account over at Thinkorswim, you've probably heard people talk about persons pivots, and you've probably heard about the PPS indicator, persons pivot study. And I'm going to show you a little bit about that today, and it's all designed and based off the elements that we just discussed together with this open high-low close relationship. So when using any indicator, specifically using candlesticks, it's very important to pay attention of not just the close, but when candlestick analysis is used and introduced, it's very important to look at the relationship of the open close, or what we call the real body. The real body's color, which we've just defined, red versus green, the shadows and correlations to the candle body, the size of shadows, the range or length of the overall candle. And that's what's neat about candlestick analysis. It gives us immediate identification of the market's current environment, and it helps market participants to understand the acceptance or rejection of an old support or resistance level in a clear visual manner. If we're coming up near an old high and we see the market form what we call a shooting star, where we see a long shadow followed by a small real body at the end of the range, towards the low of the range, then that will tell us that the market really was met with a lot of supply or additional sellers in the marketplace, right? Because after all, an increase in supply shows resistance, an increase in demand shows support. The problem with candlesticks, just like anything else in life, you shouldn't use them all by themselves. As good as they are, they should be used with other confirming indicators. And I think one of the things that you want to do is use a non-conforming indicator or non-collinearity type indicator. So you don't want to use something that measures open-close relationship or close to past highs and low relationship, like maybe moving average channels or a Bollinger Band. You want to use something a little bit different. And that's why I found what really works well together is candlesticks with pivot analysis. Now, in identifying candlesticks, there are certain sequences of events that can help form 2 and even 3 candle patterns. But there are certain candles that really only need to be identified for bottoms, such as the hammer, and they show up as a single individual candle. But we do like to look for confirming indicators to correspond, to give us at least some type of a confirmation or confirming indicator that perhaps a bottom is in. There's a lot of different patterns, and I'm listing some of the more favorite ones that I personally use and like to use and look for in my trades. And I actually have scans built in some of my platforms, such as my TradeStation and Genesis accounts platforms. We use certain scan features that I look for. And, you know, if you look over here on your left, and I'm going to draw this up, the evening doji star. Many of you that have maybe read my work before or have seen me at any conferences, and Steve has mentioned that I will be in Las Vegas in September, and we are doing a 2-day live trading seminar where I trade my own money live in front of the audience. This is probably, I think, our 9th annual event. Really great events because we kind of teach theory and then we put theory to practice the next day, where I trade my account and some people that bring the laptops, they can trade alongside. But in any event, what I look for is if I'm in I'm looking for a bullish reversal after a long uptrend, I look for what we call an evening doji star. But very few times do we see the actual textbook evening doji star formation. One of the things that we do see, by the way, is what we call the high close doji. And I'm just going to write it and label it out here. HCD. An HCD, high close doji. What that stands for, and an LCD. All right? And basically, high close doji, well, this is the high close doji down here. Excuse me. And let's go back to my pattern here. This is the low close doji right there. That's good. All right, basically, if you see after a long uptrend, you see a doji where one does not exist before. A doji is a pattern where the close is equal to the open. And here's I did a webinar last week, and I'm going to share it with you all today. One of the techniques that I use in my computer programming is that I will give a little bit of leeway to the open-close relationship to give a definition of what exactly is a doji. If you program or if you have TradeStation or other software that you're allowed to do your own programming and set up your own scans, I would say doji formation, even though the textbook definition states that the close is at or near where the market opens, I will give it an 8% value, whereas some people give it maybe 5%. I give it 8%. Here's why. How many people, we all trade in at least spiders, or you trade in the stock market, you're familiar with S&Ps, you're obviously familiar with the euro currency. You know, if you're looking at markets that have a lot of velocity, a lot of liquidity, and they have a lot of general overall ranges that are pretty large on a given day. If you have a euro currency, for example, that has over a 100-point range, 8% of the overall range is 8 ticks, right? So if the market closed within 8 ticks of where it opened, that's that 8% value, then I consider that to be a doji formation. I mean, if S&Ps have a 10-point range and we close within 3/4 of a point, less than a point, 3/4 of a point, that's 0.75% of the overall range, less than 8%, then I'm going to consider that a doji. So there's my definition from a computer standpoint of programming of what I define as a doji. So hopefully you found that useful in attending today, just that little bit of information.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.